So as I mentioned earlier, the title of this stream is going to be separating pattern from profitability. Right? There's way too many people that use these concepts that don't properly understand how to, number one, pick a direction and stick with it. But number two, filter out low probability scenarios or low probability cracking correlations that are hindering them. So that's what the purpose of this live stream is, to show you a filter for what you use. Right? I'm sure a lot of you here know about sequential SMT, TPD, right? All of that good stuff. But using it in and of itself, just coming in, looking at it in the pattern sense of, oh, if this forms, then I'll do this. It can serve you well, but it doesn't serve you that good if you don't really know what you're looking for. And coming into any trading day or any trading week, and this is very important, you have to have a draw. You have to have a point of interest. You have to have a level of liquidity that you're targeting, right? Whether it is 1,000 points away from price, whether it's 500 points, whether it's 100 points, it doesn't matter. You have to have a target as a baseline. And that target is going to tell you, okay, I'm only looking for the market to draw towards one side, which is either going to be bullish or bearish. And we'll talk about why this is, the most important thing. But coming into this week, right, whenever the week opened up, what did we say at the beginning of the week was our draw? Right? What did I put out in terms of, this seems appealing coming into the week? And like I said, this is the part where you guys answer questions. So I expect some of you in chat to answer this. It'll show the ones that have been paying attention. We wanted price to go lower. Exactly. Now, which low in particular? What was the exactly February 6th low? So if we come over here, we can look that technically this was a part of February 6th. If we go on, a daily time frame, we can see Friday, February 6th daily candle, this low right here. It's not going back to a 4-hour chart. This low was our draw on liquidity. So this was our point of interest coming into the trading week. Now, as we can see here, the week opened up, traded lower, but then there was a form of reversal, right? A reversal occurred and then pushed price back within the established range. Now I want you to pay attention to this specific area of price. How did the market operate? How did it deliver? Was it one-sided? Did it feel as though it was trying to get to a specific area? Yes. So we can see here, if we look, from the open, price opened up, traded just a bit higher, but then it was primarily one-sided. Now, what was the catalyst, if you will, looking at it in hindsight, for price reversing halfway to our target, or falling short of our target? Again, we'll see who's paying attention. Which I'll go ahead and put all of the drawings on the chart. But there was a monthly cycle sequential SMT between the Dow and the NASDAQ, right? So if we look, the NASDAQ coming into the new trading week traded lower as we expected, but on its way trading lower, it took out the previous day's low, whilst the Dow failed to take out, or not the previous day's low, but the previous week's low, whilst the Dow failed to take out that same low, creating a bullish monthly cycle sequential SMT. Yes, and that is the chat you can use to interact. Now, what did we say about this bullish monthly cycle sequential SMT whilst it was forming? Or as it had formed? What did we say about it? And you can scroll up in the main Telegram if you need to. Shouldn't hold. Exactly. We would prefer for price to not respect this. Now, why in the world would we not want to see price respect this? What could possibly be the reasoning? The draw on liquidity was lower. Exactly. So we wanted to aim for lower prices. There was a bullish cracking correlation that occurred as price was dropping lower. Anytime you're bearish and you have, whether it's a lower time frame or a higher time frame, bullish cracking correlation, if anything, that will serve as a retracement. If you're bearish on, or if you're bearish in the market overall, and you have a lower time frame bearish cracking correlation occur, in the middle of the run, let's say for instance, on the lower time frame here, that will serve as an expansion, right? And then vice versa for the other way around. If you're seeking higher prices in the market overall, right? Let's say we expected price to, draw higher, and there was a bearish cracking correlation that occurred, then we would expect price to disrespect that bearish cracking correlation. But if a subsequent lower time frame bullish cracking correlation were to occur, then we expect price to, continue respecting that and serve as an expansion. So this is very important. Reading the market narrative, understanding, everything that's happening, and being able to filter out low probability versus high probability cracking correlations. And coming into any trading day, right, you always want to have that draw on liquidity in mind. And the only thing you have to do is find a cracking correlation, especially if you're day trading. I know a lot of you in here are intraday traders. All you have to do is find a cracking correlation in alignment with that draw on liquidity. That right there removes half of the confusion, even more than half of the confusion from the equation. Because how many of you, and we can do a vote right now, you can just put a dot in the chat, or raise your hand in the stream. I believe you can do that. How many of you come into each day absolutely clueless and confused about where you're trying to have, where you're trying to get to in the market in terms of draw on liquidity? How many of you are seeking out, okay, I'll just take it. If the first cracking correlation that occurs, I'll just trade that and hope for the best. I guarantee you, if we were to do a show of hands, live, a good amount of people would show their hands. So this serves as a filter for that, right? You're only looking for one side of the market to deliver at a time. That's it. Anything outside of that scope, you disregard it. You don't care about it, right? It's not a part of the process, and it's not a part of the plan. Now, although we wanted to see price, fail in the sense of this bullish cracking correlation, we can see it did ultimately end up trading just a little bit higher, right? Going above this high right here, this swing high. Now, what do you think? How I was viewing the market during this time. Whenever price came back higher and traded all the way up here. How do you guys think, I was thinking about the market? Oh, you can only write in a 5-minute space. Forgot to turn that off. It'll be fine though. We just won't do the interactive stuff. So alongside with with what we were saying, if there ever comes a time where the market is moving opposing to your draw on liquidity or your higher time frame point of interest, does that mean you immediately flip the bias? No. That means you sit out and you wait for more information. So during this point in time right here, yes, we wanted to see this Kraken correlation fail. But as as price was trading higher, we're sitting back and we're observing on if there is still a willingness for price to want to break lower. Now, if we look and we observe, after price traded higher, seeing what it did, we can see there was a key signature right here, which was a 4-hour TPD. And this gave us the consensus that price still had a chance of breaking lower and falling. And did that happen? Yes. So from here, we're back in. We're trying to find something to do. We're looking for a Kraken correlation to get back onside the market. So, we don't care about what happens here if it's offside of the bias. But as soon as we have something telling us that price is likely to be back onside with what our higher time frame liquidity pool is, that's the time we attack. And as a result, price ended up dropping lower and a winning trade formed. Now, it doesn't matter if price reaches the draw on liquidity. It doesn't matter if it reaches the higher time frame point of interest. The whole reason you have that higher time frame liquidity pool is so you're able to filter low probability scenarios. You're able to focus on one side of the market delivering to where you're not viewing the market from both sides. If you see a Kraken correlation here or a Kraken correlation there, you're not confusing yourself. You have the ability to disregard low probability conditions, right? If you think something in the market is going to happen and a Kraken correlation suggests otherwise, and price starts expanding in that direction, then guess what? You don't do anything at all. And that prevents unnecessary losses. That prevents losing. But now we'll go onto a 1-hour chart and go a little bit, in greater depth to this. So at the beginning of this week, whenever we had called for, lower prices in the market, we can see that on Monday, a bearish Kraken correlation occurred between the Dow and the Nasdaq and the S&P 500. So between this high right here and this high right here, as we can see, the S&P 500 failed to take out this high. The Nasdaq failed to take out this high, and the Dow took this high, creating a stop run. Keep in mind, we were bearish. Whenever we see a bearish Kraken correlation, whilst we're looking for lower prices, that creates expansion. And what happened? Price broke lower, bearish PD arrays being respected, right? Price breaking lower. And then, as price was breaking lower, what occurred? That bullish monthly cycle sequential SMT that we talked about, right here. That bullish monthly cycle SMT occurred, and then we said, we want to see it fail. So notice how, right, we're going to bring the S&P 500 into the equation. Notice how the S&P 500 created a failure swing, right, on this low. The Nasdaq took out this low, and we're focusing on, only this candle here. The Nasdaq took out this low, whilst the S&P 500 and the Dow failed to take out this low. And we said, since this opposes our higher time frame draw, we want to see this Kraken correlation fail. What happened in the morning, whenever the morning session rolled around? The S&P 500 immediately swept out this low and swept out this low, right? Invalidating that SMT. So some of you, all right, especially those that aren't in here, if you see this bearish weekly cycle SMT, price expands, and then you see this bullish monthly cycle SMT, you're thinking this is, an easy trade here because, bullish monthly cycle SMT, this thing rarely fails. But if you would have taken this, it would have resulted in a loss. Why? Because it was opposing, like I said, the higher time frame draw. And price ended up dropping lower one more time in the morning before, quote unquote reversed and traded back higher. So now we'll look at the following days, right? We'll take yesterday, for instance, Thursday. What were we expecting? Lower prices. Price ended up breaking lower in London session, right? The morning session even dropped lower as well. And there was a bullish weekly cycle sequential SMT, right? And even the Dow in the morning session, right, took out Wednesday's low, whilst the S&P and the NASDAQ failed to take out that low. The S&P failed to take out that low in the morning, but ended up taking out later on in the afternoon. And the NASDAQ didn't take it at all that day. So whenever we see a bullish crack in correlation, whilst we're bearish, do we expect price to reverse and continue higher and higher and higher? No. Right? Is this a tradable SMT? Is this something that we would be able to frame a trade off of? No. Because it's not in alignment with the narrative. It's not in alignment with the bias. And for many people, this is going to be that final missing piece. Because like I said, you're going to be able to come into each day and each week with a proper filter. The only hard part now is just going to be deciphering where's the draw, right? A lot of people are confused in the sense of they think entry is the most important thing. Entry becomes extremely, extremely easy once you understand this. The only hard part, 80% of the puzzle, is just going to figure out which high or which low price wants to draw to. And then everything in between, well, I just told you how to properly, navigate that. If you're bullish and a bearish cracking correlation forms, you expect it to fail. And, subsequent bullish cracking correlations will continue the expansion, vice versa. But anyways, back to what we were talking about. So this bullish cracking correlation formed. All right, and I even had some people highlight this to me or tell me about this in the private group. But what happened today? Today in the morning session, price broke lower, right? Taking out this low on the NASDAQ, taking out this low on the S&P, and taking out this low on the Dow. So let's say you would have, gotten a trade off this or tried to frame a long off of this. You would have gotten stopped out in the morning. Now, where we're currently sitting at in price, the reason why price expanded higher, there was no inherent reasoning in the chart. The reason why price has expanded higher in the morning is because tariffs have been ruled out as illegal by the U.S. Supreme Court, which, if you don't remember, last April, tariffs came about and it caused the market to pretty much crash. But now they're ruled out as illegal, so that is good for stocks, right? And bullish news. So that's where we're currently sitting, right? This morning session, you might have found it difficult, but it was controlled by manual intervention. So this is where we're currently sitting. Okay. But I hope you guys found this one insightful. We're going to go ahead and wrap this up. So with that being said, good luck and good trading.